All right. So I want to welcome everyone to today's Commercial Multifamily Mastermind. Pray all is doing well. Thank you all for coming. All right. Give me 1 second. Okay. So today's going to be pretty interesting because we're going to talk about just a few things, but let's go ahead and get started with the intro. So welcome to the Commercial Multifamily Masterminds. We are an affiliate of the GOB Network of apartment investors. So the purpose of the Mastermind group is to get rid of that competitive mindset and to work as one. And by doing that within the commercial, within this Mastermind meeting, you have investors that's coming at you with all different levels of experience. You have new investors, you have seasoned investors, you have those who want to assist you by being sponsors. Then we also have our extended group, our extended family members, as I like to call them, those that help you with your lending and those that can help you with your cost segregation and building a fund and all of that. So that is the mastermind, and all the masters come together to help us and to help you achieve your goals and to get that investment opportunity across the finish line. So welcome to the Commercial Multifamily Masterminds. And again, we are an affiliate of the GOB Network. The principle, the mastermind principle, the coordination of knowledge and effort of two or more people who will work toward a definite purpose in the spirit of harmony. So let me just, okay, 1 second. Okay. So at this time, let me just introduce the founder, the creator. Let me see. Nope, he's not here. Of the GOB Network, Mr. Jim Biggs. Hold on, that's me again, playing my numbers.
As a member-driven platform to help people get more deals done, whether you're a new investor that has no clue how to get started, or whether you're a seasoned investor and are just looking for more net worth or liquidity or other pieces that you might be missing from your team. And as an example of that, we are sponsoring a 134 unit deal in Houston with members of the GOB and that are all on the platform in Houston. It is a 506c for accredited investors only, but that's an example of a few guys that started their company. They're all Navy officers and came to us because they hadn't done any bigger deals. They had quite a number of deals under their belt, had started small and grown exponentially, as we advise a lot of people to do. And when they got to the point that they didn't have enough money, enough network and experience, they came to us and we helped them sponsor that deal. So I just want to use that as an example of what we're trying to do to help everybody that's on the platform. And it's available for anyone If you're interested, just go visit the gobnetwork.com, and we're extremely proud to be affiliated with Darryl and this meetup, and have them as part of the GOB Network and one of our founding members. Thank you, Darryl.
All right. All right. Thank you. So now let's introduce our extended family members. Starting from left to right, Mr. Mark Gross. Mr. Gross, let everybody know how you help us being part of the family.
Sure. Thank you very much, Darryl. Good to see you again, you and everybody this morning. I'm Mark Gross from CSSI, coming from you today from Chicago area. I work on the cost segregation studies, doing projects now in Hawaii, California, and all along the East Coast, everywhere, Texas, all around the country. So I put my information in the chat. Let me know if I can provide a free preliminary analysis for any property or property type nationwide. Thanks, Darryl.
All right, thank you. Thank you. Next, Mr. Chris Peters, please introduce yourself and tell everybody how you're a part of the family.
Thanks, Darryl. Good morning, everybody. Chris Peters with StackSource. We are a commercial real estate financing platform. We've got about 1,000 unique capital sources on our platform, ranging from banks, credit unions, life co, debt funds, agencies, CMBS, private lenders, REITs, family offices. We'll work on anything from new construction, value add, repositioning, purchases and refis. We've done a lot of multifamily value add across the country. So we're very active in that space. My information's in the chat. Feel free to give me a call if you guys have any questions on any properties, or you want to discuss financing in general. Thanks, Darryl.
Fantastic. Thank you, sir. Thank you. Next, Mr. Badri, please introduce yourself and tell everybody how you're a part of the family.
Hey, good morning, Darryl. Good morning, everyone. Name is Badri Malanor, part of Investor. What we do is help you create a new type of fund, which essentially replaces doing syndication deals. It's called a customizable fund. Instead of paying an attorney for a separate PPM for each deal, this is a great new way of doing things. It's good if you're doing your own deals, or it's also good if you're capital raising for others. So that way you don't run into SEC violations because you're a fund manager now. It's one flat fee, and then there is no additional cost to add new deals in this fund. Happy to talk to you about it. I've put my information in the chat window. And we also built our own fund to test out the platform. And we have invested in over 40, 50 deals, including Darryl's deal. I guess Darryl will provide an update on how the Dayton deal is coming along. So if you would like us to evaluate your deal, just send me some information. And if it passes our criteria, we typically invest anywhere from $50,000 to $100,000 per deal. So, but again, don't think of us, think of a fund as something you start later on in your career. It is the way we have built it. It's not a regular blind pool fund. It's a replacement for doing syndication deals, and it's a great platform if you're capital raising for others. Thank you, Darryl.
All right. Thank you, sir. Thank you. Now, let me just make sure, because I did look and I didn't see any other vendors. Nope, don't see any. So let me just go ahead and move on to the next phase. Okay. So every Tuesday we meet, but between that time, feel free to join the Commercial Multifamily Masterminds Facebook page. All right, you could come here, ask questions, and we try to keep a constant post of what's going on in the market and so forth. The only thing we ask that you not do is solicit, come to the page and, post your deals or try to post your deals, and stuff like that. No solicitation. That won't, that's not going to be approved. However, to join, let me come over here. There are member requests. Oops, member questions. I meant to click on that one. All right. There are 3 questions. There are 3 questions that's asked. Please answer the questions so you could be approved to come in. This platform, our platform, including the GOB, is referral based. referral based. So if it's going to ask you, who did you hear about the Commercial Multifamily Masterminds, and you'll just put their name. Please put the complete name here. Don't put yes or no or leave it blank, because then I will wind up having to hit the delete button. All right. Here's the GOB Network. All right. If you'd like to be a member of the GOB, and it is a free membership to join, right? Just come by here and click on register. And then when you click on register, it's going to take you to the registration page right here. And you just put your name in there. Now, right here, where it says sponsor email, that's required. Please make sure you put the sponsor email, not your email. Put the sponsor email. And so that way you could be approved then, and they could verify who you are. Okay. And now LinkedIn, if you'd like to connect with me on LinkedIn, feel free to do so. And in the comments or little note box, please just put in there how we met, or how you got my contact information. I was on your meetup or meetings or whatever, right? And just put that in there, and then I will approve you. Okay. And finally, I'm asking for everyone's support to please come over to YouTube and put in Commercial Multifamily Masterminds, and please subscribe to the page. We do post information such as today. This recording will be posted here on the YouTube. It's going to be posted at the YouTube. So please come by and give a subscribe for me, so that way you can stay abreast of what's going on. All right. So referrals, I would like to thank all new people, everyone that's new here for the first time. I want to thank you for coming. Thank you for your support. Brian Stitt, am I pronouncing that correctly? Brian Stitt, S-T-I-T-T. Brian? He can't take himself off mute? All right. Well, Brian, do me a favor. Do me a favor, Brian. In the comment, let me know if this is your first time here and who referred you. Okay? Who referred you? Thank you. Thank you. All right. Good to see you, Christian. I'm glad that you was able to make it. Let me see. Who else? Hey, Lacey, how you doing?
So good, so good. Choking on myself, but I'm here.
All right, I see you over there. All right, so there you go. I just wanted to make sure that I didn't miss anyone. All right. Here in the Commercial Multifamily Mastermind, we're always looking for investment opportunities. So we come to you first. We always come to you because you are a broker who have access to apartments, or you are the owner, direct owner of an apartment complex. And I know that you're looking to sell at some point in time. So now, owners, I'm going to say to you, if you're looking to sell your property in the near future or now, I'm asking you to come here to the Mastermind and to let us take that property down. That's what I'm asking, okay? I'm asking you to come here and let us take the property down. We have the resource, we have the capability to get it done, all right? Brokers, listen, you know I'm in the same field as you. I'm with KW Commercial. I know you have your buyers list, and I know that you're going to contact those buyers, that buyers list first. But if you're spending some time in here And then we've built a pretty good relationship. I'm asking you to come here and bring that property here too, because right now we have 37 people. And I can guarantee you that somebody in here wants that property. So before you run out there and hit the buyers list, come on, bring the property here, because this is what we're about. We'll take it down, okay? So updates in reference to what's going on with the properties that you and I may be working on. So Dayton property, the Dayton, Texas property, we're raising capital, is going very well. Our scheduled closing date is Friday, but I have to get an extension. The lender is still processing information. As I told you before, when you're going through this process, keep all your documents in one folder. As you send information to the lender, I'm telling you right now, keep that information in a separate folder by itself, because you're going to be sending that same information about 5 times. So they still asking for information that we're, you know how it is. You send information, then somebody else wants the same information. So as of right now, we're not going to be closing Friday. We're going to have to get an extension, and it's going to most likely be pushed into September. With a loan assumption, the process, and I'm sure some of you may have already heard that the process is a little lengthy, and it could take a little longer to close. So right now it's just taking a little longer to close, but we're going to close. But for right now, we're going to still continue to raise capital until the bell sounds. So if anyone is interested, if you don't know about the Dayton property, it's an excellent property. And I'm not saying it because it's the property that we're working on. I'm telling you that because the numbers speak for itself. The numbers speak for itself. And if you would like to know more, reach out to me, okay? You can invest as little as $10,000. That's right. I know some of y'all fell out your chair. Pick yourself up. As little as $10,000, okay? Reach out to me for more information, or reach out to Alicia or one of the team members, because let me see, I'm looking to see what other team members are here. But reach out to Alicia, reach out to myself, or one of the team members that are here. We'll be more than happy to accommodate you. Who else working on? Oh, we also have, the GOB is moving, I'm telling you right now. We also have 68 units under contract. 68 units. Who's here? Reggie here? Reggie.
Definitely here.
You want to go ahead and talk about that, or what you want to do?
Yeah, definitely. 68 units under contract. We went under PSA last week. We raised, I think, the earnest money to be in today. So we'll be waiting on the we're waiting on all the due diligence information to come in from the broker. So that should be beginning this week. I'm really excited about this, looking at the underwriting. I'm looking at that, we're definitely looking to raise risk capital, and we're definitely looking to raise capital, period. I believe we need right now, for what we're getting, we're looking almost about 2.6 million that we're going to do for a raise on this deal. Yeah, it is a little. So the expert is that it is a total rehab, a total ad value, meaning that you got to go in there. We got to do everything to it. We expect that we'll have everything done by year 2, and by year 3 we're talking about refinancing. In that time, we're looking at once we refinance that people could almost triple their money. We almost in that category right there with this deal right here because of so much that can be done with this, you know. Also with this deal, we have a caveat of another commercial, not apartment building, but a commercial unit across the street was used as like a daycare, things like that, that could be turned into an office that's not even underwritten in the deal at all. So, you know, it doesn't really take anything else. So that's going to be another add value to this deal. So I think it's a really good deal. Anybody got questions, please reach out to me, Peter, Daryl, Richard. Yeah, and we could definitely try to help you guys with your questions. If y'all have any questions, if y'all want to invest, I think we will be going into the fund as well. So this will also be accepting as little as $10,000 for this deal as well. But if you want to be a GP, it's 500. So yeah, definitely reach out to us. It's definitely a great deal. We working with the city, everybody behind us, everybody talking highly upon the deal in the city, the statesmen, everybody. So we talked to the aldermen, so everybody want to work with us with this deal. So we got the city behind us. So yeah, guys, we on the roll. We on the roll.
Good to go. Good to go. Good to go. All right. Who else working on something? Huh? Who else? Come on, don't be shy. I know y'all working on something out there. No one else?
We're working on a deal in Kansas City, so this is a new market for us.
All right.
So yeah, any boots on the ground in Kansas City, I'll leave my information in the chat.
All right. All right. So Kansas City, we need some boots on the ground there. Now listen, that's a good way for you to get in on a deal. If you're looking to get started, that's a good way right there. And I'm gonna tell you another good way. We're putting together the challenge is the GOB has put together a challenge. Boy, I am stuttering today, aren't I? So the GOB has put together a challenge, right? Now, this is open to anyone, but this is what's important. And this is what I need you all to hear. There's a commitment to this thing. And the way this is going, I'm restructuring it to how this thing is going to run. But if you want to get yourself out there, if you want to start looking for your first deal, let me know. And I'm going to put you on it. And I'm going to start a team with you. Now you're going to go through an orientation process, but you're going to talk directly with me. You're going to be dealing directly with me. And we're going to push you. If you can't be committed, don't do it. I'm going to tell you right now. If you cannot be committed to the process, wait until you can be. Okay? Because I don't want you to start with the team and then you can't be there. You can't do this, do that. You're missing a whole bunch of meetings, and then I'm have to ask you to please depart from the team. So if you want to get started, and I know there's a lot of new people out there, this is your opportunity. Right here, right now, this is your opportunity. Okay, so reach out to me. I'll put my email in the chat, so that way you could contact me, and I'll set up a special meeting, talk about things, see who's committed, who can do it, so forth. All right. What else? So anyone else now? So does anyone need help with anything or have a question? This is where you get to ask questions, because you're new. You're trying to figure things out. Listen, come off mic, come off mute, ask your question to the masters up in here. Don't be shy.
Hey, Darryl, go ahead.
Go ahead, Patrick.
Yes, I have a deal I was trying to.
First of all, Patrick, I'm glad to see you back, man. I was worried about you. I've been calling you. You haven't been returning my call, so I was worried about you, man. So, I pray that all is well, and I hope that you're okay.
Yeah, I was out there trying to get a W-2 because things wouldn't go like I thought. took
Okay.
advice, give me a W-2 for the time being until something kick off. But I'm still working on things on the side. I came to a situation that I have never heard of before. I just asked you y'all wisdom, knowledge, and understanding how to do this. I ran across a property that was, you have to get they'll do the underwriting for you, but you have to get the potential buyer to do like a disclosure contract first before they even show you the information about the property. But it's a good deal, and I wanted, if anybody would be interested, it was a apartment building in Houston, Texas. I think it's about 100 some units, up to 240 units. But they have to be somebody that sponsor to sign the disclosure contract, somebody some kind of equity or a good name for themselves, so they can just look at it. It's not no commitment, it's just so just can look at it, so they won't be closed out of the deal. And if you have any,
I'm sorry, go ahead, Patrick. I thought you was done.
no, I was just going to ask you if you have any kind of
I got a question, Patrick.
Wait, hold on, Reginald. Hold on. Go ahead, Patrick, finish.
No, I was just saying if you have any kind of word of knowledge for me, what to do about this, how could I get people to sign, they want the LLC before they send it to you, but they do the underwriting, but you got to sign a disclosure contract first.
So they're going to do the underwriting.
Yes.
Right? Okay. And they will release the information to the person who signs the non-disclosure statement.
Right.
But they will only release it to someone that has a record.
Well, somebody has the ability to buy the property, in other words.
So someone that has the ability to buy the property.
Yes.
Well, you got the ability to buy the property. Why wouldn't they?
Well,
Why won't they let you sign?
They want to see proof of funds, like if they proof of funds, and I guess I don't know how much deep they want to go. Probably like bank account or something. I don't. They say that they need extensive proof of funds because they know they're gonna just be missing somebody that's ain't qualified to buy. So they'll be wasting their time. So they say.
Right.
Can I ask you a question, Patrick?
Yes,
what is the how much is the deal worth? What is they asking for the deal?
I think it's like 3 million plus. I'll get all the information to you if you're interested or anybody interested.
So the reason I'm asking you, so you just need a person to show 3 million in a bank account?
Yes, something like that. Yes.
Okay. Send it over to me. I got a guy that's interested in KPing on deals and jumping into deals anyway. So
all right,
let me see how that's looking. If it's a good looking deal, then yeah, I mean, I could talk. I'll reach out to him. He definitely want to KP or GP on the deal. So yeah.
Hey, also if you need another person, I'm here too. I do got a POF for over that. So if you just need somebody to go to POF or sign or anything like that, you could reach out to me directly. I'll put my email in the chat box for you, and then my phone number as well. You can reach out to me if you need that.
Appreciate it. Thank you.
Of course, man.
All right, there you go. See that, Patrick? See that? Anyone else need help?
That's right.
Anyone else? What do you need help with? New people, come on now. As many new people up here, you need help with something.
I'd say for me personally, I'm just looking for sponsors. I have the ability to get liquidity pertaining to, I have a lender and I have liquidity on the table. Right now, I'm trying to purchase a lot of multifamilies. So right now, just looking for sponsors that has done over 250 units, and anybody's done from 50 to 50 million plus. That's pretty much what I'm looking for right now.
Oh, well, we got sponsors for that.
Yeah, so I mean,
Yeah,
I texted you, but I think you're a little busy. So whenever you get a chance, you just text me back.
Oh, okay. The only thing that I'm going to request, if anyone needs a sponsor or something like that, and if you have an investment opportunity, what I'm going to request from you is the rent roll, the T12, and the OM if you have the OM, because if you're dealing directly with the seller, you may not have an OM, all right? But if you're dealing with a broker, you're going to have an OM, well, most likely. So I'm going to request the T12, the rent roll, the OM. Of course, I'm going to underwrite it before I take it to my sponsors. Okay, I'm gonna underwrite it to make sure that it fits. And because if it doesn't, I'm not going to waste that time, right? And make sure it's the latest numbers. Please do not send me numbers that's back in May and 2021. I'm not going to even look at it. I'm just going to hit the delete button. Okay. All right. So anyone else need help with something? Come on. Anyone else? How about this one?
Hey, Darryl, I got a question.
Go ahead.
Sorry.
Go ahead with the question.
This is Clint out of Houston.
Hey, Clint out of Houston.
Appreciate you doing this, man. I really do enjoy these. I have a question about 1031 exchanges. How do those really fit into, I know you can buy existing properties with it. You can buy land with the 1031 exchange. But I just want to kind of get your take on how to really take advantage of 1031 exchange opportunities, because I've recently tapped into 2 resources that have access to 1031 money. I just want to get your take on that. Or the group.
My take is, one, that's an excellent, if you have someone that have 1031 and they're ready to place that money, that's an excellent thing. But you just have to match them up with the right opportunity, right? So, and what do I mean by the right opportunity? Well, with 1031 money, on the deal that I have, we could have taken a 1031, but it would have forced me into restructuring the whole restructuring all the paperwork, because 1031s, they are tenants, they have to be tenants in common. So they're going to have an active role and stuff like that. I didn't want to go through paying the extra money. Then I would have had to get all the investors to re-sign everything. And also with a 1031, there's a little higher risk, because by being a tenant in common, they can actually sell their share of that, and you don't really have much of a voice or say in it. So sometimes it could be a little risky, but 1031s is really, really good. But you just find the product that fits them. So if somebody up here has a deal and they're looking for some 1031 money, that's an excellent opportunity. I'm gonna say go for it. Go for it.
Okay, appreciate
Excellent
it, man. Thanks.
Yeah. Patrick, I see your hand up.
Yes, just throw this out there. If anybody interested in doing development, ran across some property. It's in a subdivision. It's growing. It's 19 acres. They want 1.9 for it. And if you're interested, let me know, because I know it's something I'm not familiar with. But it's already zoned for multifamily and single family.
All right. Make sure you put your information in the chat room, in the chat box, okay?
Will do.
Hey, Darryl.
Okay. Hold on a second, because Antonia has her hand up. But also, just to let everyone know, you may be asking questions in the chat. I'm sorry, I don't read the chat box. All right, not right now, because I'm just too busy and I'm moving around. So I'm going to ask you to take yourself off mute. Don't be shy. You don't have to give your name, not unless you're in the witness protection program and you don't want to be seen. I can understand that. But other than that, take yourself off mute, ask your questions, then go ahead and put yourself back on mute. But I don't have time to really flip through all of them comments. So Antonia, go ahead.
Hello. I'm
How you doing today?
I'm all right. I'm working on signing the documents. I'm gonna get that to you today.
Fantastic.
I have a question. I don't know if we do math on this call or not, but I do need some help trying to figure out the internal rate of return on a project. I mean, I've seen the formulas, but it's still kind of difficult to do.
That's not a problem.
Okay.
But let's do, matter of fact, I have a project that I'm going to be showing. and I will see the internal rate of return there. You want to see the actual formula for the internal rate of return?
Yeah, because I also have a project that I'm doing, multifamily project, and I have all the other numbers. I just need to calculate that. So it shouldn't be too difficult because I think I have what I need to do it, but I just need some help on it.
Okay. But doesn't the your model doesn't give you the
No,
IRR?
no, I don't see it on here unless they're just calling it something different, but.
Okay. So I want to get the formula for you, but let me work on getting that formula for you, but let me move forward with
Okay.
everything because it's not difficult. I mean, it is, and Excel runs the IRR function. So I
Oh,
do know that if you say equal IRR, right? And hold on 1 second. Let me just take a second, everyone, just a second. Okay. I'm going to open up a separate sheet right here. So if you were to say equal IRR, see that right there?
mm-hmm.
That's your IRR. And then what you would do, you would take, let's say that you had, give me 1 second. Let me put some numbers up here. 2.3 ... 4, something like that. Make sure it's that. Oops. And of course, I got to put a closed parentheses. So this would be the cash that's been invested. That's a negative. So then let's say that this is your cash flow for year 1. Oops. Year 2, 3, 4, 5. So with the IRR function equal IRR. Now, if I'm wrong, someone you tell me, but if I'm mistaken, my Excel does it for me, but I do remember in class, in the class that I took, you take the IRR and then you take this number and you come straight across, close, and that's your internal rate of return. Only thing it has to be a positive number. So you can either make this an no, you can't make that an absolute, but either way, your IRR is going to function, going to give you a percentage such as this. So, and that's what I'm looking for. I do have the Excel by itself, and I could send it to you so you can see exactly how it's done. Who's that?
Okay.
Somebody.
So Darryl,
Thank you.
Yeah.
So Darryl, I know you showing it right there, but how I take it is like, where I learned how I went was like the net cash flow that's coming in and, that time period. So if you got the net cash flow, you add up the net cash flow. And if it's in a year time period, then you calculate the net cash flow that's coming in. And then what that'll be is divided by the return. So you'll divide that rate by the returns that you make, meaning that, so that period, you're looking at the total investment that you're going to subtract your total investment that you had by that time frame, that year time frame of that. And then you're going to divide that. Let me get this right. You're going to divide that by, what you divide that by? You divide that by the internal rate of return. So whatever that internal rate is. So then you divide that by the internal rate, and that should give you IRR, which is kind of, I know is a lot. So, but I just use the Excel spreadsheet, because when you try to do the math yourself, you really got to be a mathematician with a lot of this. Even though it's easy, it's just basically talking about time. So that's all the internal rate of return is, dealing with the time. If you got 1 year, 2 years, minus what your initial investment was. That's how I basically look at it. That would be your internal rate of return.
All right, give me 1 second.
Somebody put the formula in there.
Did they put the formula in there?
Yeah. Somebody put the formula right there. Zach put it in there.
Good. Let me see if this is it right here.
Now, what you got to make sure is that your underwriting template has to have all the numbers sequentially positioned from initial investment to exit. And this does not account for if in year 2, let's say, you return 50% of the investor cash back to them. That formula does not account for that. You would have to do it manually and break down the formula instead. Okay. But if you're going to insert this into your template, what you want to do is do a separate line to calculate it on year 1, then on year 2, year 3, year 4, then you get to see exactly where your break-even point is.
And that internal rate, assuming that you're putting all the money back into the deal, correct, Mike? Yeah.
Oh, it's whatever you could take out of the deal to pay back the investors. Let's say you're paying 10% per year, right? You're paying back 10%, and then you have extra cash to pay to the investors. Okay.
So, here we go. Because I'm not going to stay on this forever. Hold on one second. I'm going to show you right here. Here's the formula, and you'll have it. So, this is the IRR. This is the IRR, say, that you're looking for. And right here, I'm going to just jump right across. This here, net levered cash flow, this is the formula right there for your IRR to calculate right here. So it's IRR, parentheses, take all this, that's what I said, close parentheses, and that's what it is.
Oh, great. That's perfect, because I do have that line in my sheet. So
yeah,
great. Thank you.
All right. Yeah, I thought I was right, but wanted to make sure. But that's it right there. So that's the formula, equal IRR, and then you have to take all the cash, even the negative acquisition, right here, come straight across, and you'll get your IRR. Okay, so we spent some time on the IRR. I hope that was a good one. So, but that was a good one, Antonio. You caught me off guard on that, but I was on point though. You caught me. All right, go ahead, Henry Perez.
Hey, how's everyone doing today? Again, my name is Henry. I'm new to this platform, but not new to real estate. So I guess I just caught the end of it and just wanted to know a little bit about what you guys do here. I know it's real estate, but I guess just what is it that you guys offer besides some great knowledge that I've been here for a couple of minutes and I've already been learning some stuff. So
what is it that we offer? That's an excellent
What's
question.
What's your mission statement, Darryl?
I know. How about that? No, but I'm not gonna, since we're not on the elevator, I want everyone here to answer that. I'm not gonna answer that. I'm not.
Hey, so Henry, I think,
what do we offer here? What do we offer? Go ahead, Reggie. Don't keep it long now. I want everyone.
Sure.
Give
just
a short thing of
sponsorship, training. That's
okay.
1, 2.
Okay.
Yeah,
what else? What else we offer?
I would say that this group offers all of the information and resources and support that you need to be successful in commercial real estate investing.
Wow, that sounds very familiar. That sounds very familiar, very familiar. Wow, okay, what else do we offer?
I would say just to reiterate what Antonia said, it's an extended hand, and I think there's some creative solutions in this group, and the synergy is it's amazing.
Okay.
So I would say, just me being here 2 years, I would say they offer everything that you could get from any kind of mentorship, any kind of commercial training that you'll go and look at. You could get everything in one place. They offer a one-stop shop for your sponsorships, your mentorships, your KPs, whatever you're looking for. If you're looking for deals, they offer that here.
Gotcha.
So that's what you can.
Okay.
I would say whatever you need from A to Z in closing the deal, securing the deal, finding the deal, partners, GPs, sponsors, whatever it is, you can find that here.
Awesome.
Yeah, Darryl. So actually, what I think you guys offer here is one thing, only one thing, a community of investors.
This is a mastermind group. You have people at all levels in here. You got people that's in here that could be sponsors. You have people in here that's accredited, non-accredited. You have brand new people in here that's never even done commercial real estate, but they want to get started. You have in this group. What do we offer? We offer so much here.
Okay.
Right? If you want to pay $50,000, $40,000, $30,000 at one of those other places, that's cool. But we offer all of that right here. So Henry, how did you hear about us?
Actually, I think we actually spoke a couple of times.
There you go.
There we go. So yeah, I'm the guy, you know, I just, timing just didn't allow for me to connect, and we finally get here. So I think I've been reaching out to you, and we definitely been on the phone here and there. And then I got a notification on the email, and it just the time kind of allowed. So we put some names and faces. And again, I am doing deals. Just a commercial is something that's been on my heart lately. So I'm definitely itching to go that route. And I know you definitely have been a wealth of knowledge to me. So it's only right just to kind of sit down and see one of the masters at work. You know what I mean?
Thank you, but you got a bunch of masters in here. I'm gonna tell you right now, you got people here, man, they are way stronger than I am. I'm gonna tell you. You know, they're very modest, they low key, they don't say much, but I'm gonna tell you, we all help each other in here.
Awesome.
That's how it works. Kenza, what you guys say, Kenza? Go ahead.
I think everybody said it, but I would think, you know, it's a strong community of people, you know, a very diverse background. I think I've been in a short time. You have people doing multifamily, different states, a strong group of women, yay, the investors, you know, and I think, you know, whatever level you're at, you know, they will meet you where you are, and you'll learn about, you know, retail, triple net, you know, just all different types of things, mobile home parks and things like that. So it will open your eyes beyond what you're already doing. So you can always expand what you're doing.
Awesome. Awesome.
And I'm going to add this. If you're ready to take that step, and this is for everyone that's out there, if you're ready to take that step to acquire your first property, I'm gonna put my contact, I'm gonna put my email in the chat. You reach out to me, I'm gonna put you on the team, but I'm gonna tell you right now, I want straight commitment. I'm telling you right now, I'm telling you before you start typing the D on the email, I want straight commitment. And because you're gonna go through the full process, we're looking for properties, we're gonna take that sucker down. I'm just letting you know, all right?
Hey, Darryl.
Yeah.
It's Marcus. Good morning. Hey, I just wanted to add to Henry to there. I don't say much a lot of times on these calls because I listen, but for Darryl to run this organization the way he does it in this group, I have to truly say I've been going to different REIT groups for the last 10, 20 years. He gives so much of himself on this thing, and he takes the time to actually sit there and talk to you about it. Me, a couple of calls I done had with him on a personal level. Henry, I don't find a group like that very often, especially the leader of the group, who Darryl is modest, but he is the leader of the group. And for him to put as much time and stuff that he does into it and to each individual person. And other than I can say to you, Henry, it's really good. And I think you should try it because I've been in the group a short time and I went to the GOB conference and all that stuff. I learned a lot more without them trying to rob me and take me to the bank in the process.
Thank you so much.
Yeah, like Darryl said, I can name 3 other groups, but they're gonna cost you 40 or 50,000. And for you to get the same education you're getting from him.
Right, and And I totally understand, you know, at the end of the day, time is money and people definitely need to get cost, you know, everybody needs to get money. Everybody needs to get, you know, this is what this is about. And it's not about free, because nothing free. Sometimes you don't have that commitment fee to it, but that's a whole different conversation. But, you know, sometimes I think you just said it absolutely correct. And a lot of other people on the panel also said it, that people just taking money just because people don't know, you know what I mean? I think that's a travesty to the business itself. And people just want, and I've known firsthand that pay me first and then I'll teach you later. And then what you teach me is BS.
Right. And you might not even get anything out of it, what they taught you.
Exactly. Exactly.
Exactly.
So let's move forward. Marcus, I appreciate that. Now, listen, everyone, don't y'all all rush to send me your invoices to get paid for those comments. I ain't paying you. All right, but let's go ahead and move forward. But thank you, Marcus. Thank you very much. I want to thank everyone for the comments. I want to jump in this just to take a few minutes, and I want to take the time for a lot of the new people, the seasoned people. I know you already know this, and just hang around for 9 minutes, seasoned people. I know you don't. I don't want you to get bored and leave. But I want you to help us too, seasoned people. Help the new people. So the reason why I put this up is because what this is an actual property, and it is in Houston, Texas, that we were underwriting, and it's 100. It's how many units? I think it's 124 units, but this place had a fire. So actually, the place had a fire. One building, the whole 16 units right here was destroyed, right? So one of the boots on the ground that I have went out there to see the property. But what I wanted to do is pull this up, and I just wanted to run through things for new people. Again, seasoned people, I know you know how to do this. Now you're gonna say, oh man, he's going back. This is boring and all of that. Please, just hang in there for another 8 minutes, and then and this way we could answer questions from new people who never underwritten before, right? So for new people, start asking questions. Raise your hand right now if you're looking at something and you're saying, like, if you wonder, like, what is it? Let me enlarge it a little bit. Okay, let me enlarge it just a little more, because I'm not worrying about what's on the far end, right? So this is this model here is a value add model. The value add model, this was created by Spencer Burton, okay? And what you see here at the top part, you basically this is just the information from the apartment, you know, the property, stuff like that, the general information. And here you get into the purchase price, acquisition, closing costs, soft costs, hard costs, and the lender reserve financing costs. Now, this part here is from here all the way down. This is going to be the part that's going to really control a lot of your cash flow. Okay, so when you start, it's not a lot, some of your cash flow, because one, you got to pay interior renovation. You're going to put out money for exterior renovations. Okay, of course, purchase price is going to affect these numbers up here, your IRR, equity multiple. Now, when you see, and I want to really get into this, when you see right here where it says gross, see that? Gross, average. When you see gross, the gross, one, this is a combination of both the IRR, the GP and the LP. And if you want it, and if an investor was to ever say to you, what is your net IRR, okay, then you will have to go down to on this model. It gives it to you what the net IRR is. And a lot of times you can see that the net IRR is different than the gross IRR. Of course, it's different. You know, when you get your gross salary, that's your money before taxes, but your net is what you're going to take home, right? And taxes come out, right? So that's all it is, right? So you got your gross IRR, gross equity multiple, you got your average cash on cash. Now your average cash on cash is going to be over a 5-year period, or whatever the hold time is. If you go hold it for 5, 7, 10, 20, 30, that's what you know. So if someone say to you, hey, I got a deal and it's an average cash on cash of 10%, you ask them over how much time, over what period of time is that 10%. And so they say, oh, 3 years, 5 years, 7 years, 10 years. Okay. You know, and then after that, you can break it down even more. Okay. So what is like in year 1, year 2, and stuff like that, right? Okay. Your sources and uses, right? Sources and uses is this information here is it's going to take all of the above, right? And they're going to, as you can see right here, they take all of the above and they summarize it all right here. So here's your sources, right? So this is the cash flows from the sources. And then you got your uses right here, right? And that's where you get your equity, debt service, and this where this is going to come in. So you have your equity, you have your sources and uses. And if someone asks you about sources and uses, they want to know about your acquisition, hard costs. They want to know about your loan. That's what they want to know about. You know, the GPs, how's that split, so forth. You know, they're going to want to know about your debt. Is it a loan to value, a loan to purchase, loan to cost? That's what they're going to want to know. So that's what this is right here. Now, here's your financing assumptions. This is where you're going to call your friendly local lender or bank, and he's going to give you some terms. He's going to give you some your interest rate and stuff like that. He's going to tell you about if it's a fixed or if it's a variable, so that way you can make your necessary adjustments and so forth. So now we get into the real cash flow. This is the part that could change a number in a heartbeat. And when I say that, let's just say we make that a 6. Did you see that, how the number just changed right quick? So just by changing this here really affects your cash. Look at that. You see that right there? See what I just did? And it changed your money. So if you wonder, if you ever have let's say a deal and you're saying, how can I increase my cash flow? Look at one, how much cash am I having to put in, such as hard, soft, because if you reduce your renovation costs, of course, that's going to bring up your numbers, right? If you reduce your purchase price, that's going to bring up your numbers, right? So when it comes, then you want to talk about like direct cash flow. What is it that can change my cash flow, my cash on cash? What are the things that control cash on cash? One, rents. If you were to bump rents up, okay. If you were to increase your growth, if you were to decrease expenses, if you were to increase or decrease the opposite of them, right? That all is going to affect your cash. So now, what else affects your cash? Here we go. So now you got other income. Other income could be a combination of things, okay? So, and not just application, parking, rugs, but it can also be other things, soda machines, vending machines, all kind of stuff. So those are going to be your cash flows. Your vacancies are right here. So vacancy, you got your general vacancy, then you got your credit loss. The credit loss is going to be your loss to lease, bad debt, and concessions. Some people also will call that an economical loss or economical vacancy. Depends on who you talk to, depends on what they're going to say. All right. But this is another section here, right? That's when it comes to your cash flow, what can affect it. Okay. Here's the expenses from the seller, because these are your post-renovation. So this is from the seller, and this is going to be yours. This is your rule of thumbs and stuff like that, okay? And then as you come down, all this is part of your cash, as for your expenses, your income, and this your capital reserves, okay? Now, this is something that's really important, your DSCR. Your DSCR is your debt service cover ratio, and this here helps you to this here tells you, not helps you, but this tells you if you have, I'm going to put it simply, a good cushion or not. You know, do I have enough money to service my debt, right? And the 1.28, you do have the money to service the debt because that is the one, and then you also have a 28% overage, and that's pocket money, as I'm going to just say pocket money, right? Without going too far into things. So that's what your DSCR, debt service cover ratio, if the bigger this number, the better you're going to sleep at night. If you see a 2 on the DSCR, you could sleep real good because you know that you could pay 2 times. You really have enough to pay twice the debt service, okay? And now when it comes to reversion cash flow, that means when you get ready to sell. What are we looking at when we get ready to sell on a reversion? Going in, let's say what is the market cap today? Market cap is 5.5, but when we get ready to sell, you don't know if how the market is going to be. So we usually, you'll see investors move their reversion cap higher by each year. So let's say you're going to hold it for 5 years. Like this is a 5-year hold. So 5.5, and then you add 1/10 of a point every year. That's going to take it up to 6, right? So that's your reversion cap. Now, if it was 7 years, then it'd be 6.2 and so forth. Okay. Your selling cost, the selling cost is the broker. You're going to pay a broker or someone to sell your property for you. So you're looking into the future and you're saying, okay, well, we're going to calculate a 2% sell to the broker. Okay. And the rest of this is just a performer. It's really all them numbers that's above. It's just been moved down here. But what I want to really jump into a little bit, which I'm not going to jump on it, but I really want to just get the basic. So remember I said to you about your gross? Remember I said that? Gross? Well, here's your net. This is the net. So now these numbers are just all off. So if this deal made good sense, then you would see exactly what I'm talking about. But the IRR would be a totally different number. The equity multiple would be a totally different number. Then your average annual return, it would, of course, it would be all positive numbers. So this is where you can see exactly what the IRR is for the limited partners by itself. Limited partners by itself. And then here, you will see what it is for the general partners by itself, general partners by itself. So that's why that's the net cash flow. So I just wanted to run through that right quick. And I wanted to, the new people that's here, just so you could get a taste of what you're going to be faced with, dealing with when it comes to underwriting, because this is all part of your underwriting, right? Different models have different things, okay? Different ways of performing, but this is what that is. So if anyone have any questions, let's take a minute or two for you to ask questions so that I can answer a question. Any questions? Because if not, we're going to go into breakout rooms. To the new people. Oh, I see 2 hands up. Henry, you got a question? Nope. Shaylin, you got a question?
Yes, thank you for running through the underwriting. Nice to meet you. If you could go back to the underwriting template, I had 2 questions. First, when you were looking at your cash flow section, you have like the 2%, 4% increase year 1, year 2, year 3. Could you talk a little bit about how you come to those percentages?
Sure. So the one thing that I truly believe is although we all use percentages, I want you to really focus on the dollar. But how did I get the 4%, right? And how are you going to get your 4% or 5% or whatever? You're going to look at what your market, you're going to look at your market, right? So let's say that you're in a market that has, say, a 5 or 6% growth. And so what you would do, right, if your market is growing at a 5 or 6%, one, I would not recommend you totally underwriting at 6%. Be on the conservative side, because if the economy shifts, you want to be able to absorb that 1-2 punch that the economy is going to throw at you, right? So so your market says, yeah, we growing at 6, and you underwrite for 6. Then all of a sudden, here come Mike Tyson, and he punch you in the face, and now you're like, holy smoke, I can't stabilize my 6, right? So I always say, be conservative, underwrite slightly below what your market is, 6 or 4 or whatever, right? Like what I have here. Okay, like right there, right?
So is this operating cash flow section just basically how the property would operate without any value add?
You can underwrite this. You can using this model, you can underwrite it, whereas there's no value add. That 4%, I'm going to definitely say you can do that. Yes, you can underwrite this, but there's no value add, none whatsoever. And yeah, let me just say yes, you can do that. Now, let me also say this, Shaylin, when you see a percent, don't really get caught too much in the percent. Ask them, what is that in dollars? You may be surprised. So let's say we do a 4% increase every year, right? And you say, okay, well, how much is that in dollars? You may be surprised that it's not a lot of money. See that? That's $27 every year that you're raising rent. So you can, when you do that, you can say, wow, I know in my market, they're raising rents $100, right? Again, Shaylin, stay on the conservative side. Push your number to where you really know that they can pay. And I would say, I don't go over $50. Not unless my property manager says, Darryl, you could really bump those rents more. And then he's going to give me a report to show me, yeah, I could definitely bump it even more. So now this is what I'm going to tell you, what you're going to run up against. This is what you're going to do. You're going to put a 7 here, and you're going to put a 7 here. Let me see, where am I? Yeah, that's about right. So you're going to put a 7, 7, and you're going to run it, right? You're going to run it straight across. And as you can see, that's $46. Somebody's going to say to you, Shaylin, isn't that 7% pretty aggressive for rent increase? And you can say, not when you convert that 7% into dollars. We all know that in, let's say in Phoenix, Arizona, they're getting way more than $46 a month. They're getting like 150, 200 bucks, right? So actually, sir, I'm being very conservative, right? Now, so you bump this up. The economy, as you already know, inflation is increasing, right? So this, look at how your market is doing, and you definitely will. I'm going to say, because this model is pretty. These are placement numbers. I would definitely say increase your numbers if need be. If need be, if you need to increase these to maybe 3% or whatever, you know, if you're going to take this to 7, you may want to definitely increase these numbers here, say probably 3%. Or you may say, well, no, I'll let CapEx stay 2% because I have a big reserve. You may have a big giant reserve up in here somewhere. Like right here, you may have a big reserve where you could say, okay, I could let this stay 2%. Okay. And you can also play with this to where it goes to 2, then 3, then 4, then back down. You could do whatever you really want, but just check and see how your market is performing, right? And usually I'm in the Texas market. So usually you will see me underwrite letting it stay at a 2% for my market here. If the market happens to get worse within next year or this year, then I will make necessary adjustments. But as for right now, I'm pretty safe with 2%, and my property manager says that my 2% is good to go. Did I answer your question?
Yeah, you did. Thank you.
All right. Thank you. And Shaylin, thank you very much for asking the question. I appreciate that.
Hey, Darryl, what calculation is you using for that? Could you go back to there, Darryl? What calculation is you using to adjust the rents to show? Like, because I know that's not on a normal template. What are you putting that? So to see that you got $27, that your rent raised to $27. What? Because you did that yourself, right? You made that happen,
No,
right?
oh, you mean this here? Did I do this myself?
Yeah,
I did that myself. But let's say that the investors say, well, I want to see this over a month period of time, right? Say, sure. You scroll over, there you are. You come right over here. And this is broken down on a monthly basis. Okay, everyone. So you can actually take the average of this right here, okay? And all you gotta do is subtract one from the other. If you subtract 673, or take the average number, but let's just take 673 from 671. How much is that? $2, right? $2. And if you was to carry that $2 for 12 months, that's $24. Gotcha. Right there. That's $24. So if you increase in, let's just say, so every month you only going up $2. We all know that no matter what market you're in, I think even in the worst market, you're getting more than $24. Just to let you see that. And if you want to see the pre-renovation, just slide it over a little more. That's what you have. Gotcha. That's if they ever want to see it month by month on a monthly basis. You can show them like that. So, all right, Mike, go ahead.
In reference to the model, whichever model anybody's using, you should have a optimistic and a pessimistic. So in other words, you should stress test it yourself. And the way you can do that is in the operating section. You can increase those percentages to see where you would be with 0% extra cash flow to pay back to the investors, just so you can see where your upper limit and lower limits are in terms of rent increases, and what if there's no rent increases for 1 year and operating expenses go up to 5% year over year, all that kind of stuff. So some models have the ability to do stress testing, but some don't. So you can do it yourself within it. And you just save the results as 2 separate spreadsheets.
Mm-hmm. And that's excellent. And you could do it on this model. You could listen, if you want to know what it's going to look like with a 9% interest, or take it up to 9%. And you can see what it's going to look like. How high can you go, right? And in our industry, it's what's the max allowable offer, the MAO, right? Am I saying that? Max allowable offer that you can offer, right? So you're going to test it out. And believe me, when it comes to underwriting, you are testing your stuff out, because what's the max that I could go and rent? What's the max, or where, once you get your purchase price and you're not there, you're starting to look at certain things. Suppose I reduce this or increase that, or but I will say, and I always say this, look at it as a business, because that's what you're running. You're running a business. Although it's an apartment complex, it's a business. Profit and loss statement is a business. Okay. So with that being said, anything else? Any other questions? I want to put a plug out before we go into a break. I know people are going to start dropping off like hot flies. I want to put a plug in for Alicia Milton and Jacqueline Harris. Please catch them on their podcast. And I'm going to ask them to please put your podcast information in the chat, so people can, and also Jacqueline and Alicia, y'all got to remind me early on when I be saying updates and stuff. Are there any updates? Yeah, updates. I got my podcast. So we got to let the world know. Okay.
Okay. I thought it was just for the deals.
The deal. Oh, no. Updates. How we doing, right? So please catch them on their podcast. They're excellent. Jacqueline, I didn't see my podcast yet.
Yours is coming out Friday at 2 p.m. Pacific Standard Time. I'm working on it. You're gonna see your little face on LinkedIn in a couple hours promoting.
Thank you very much.
You're
All right.
welcome. You're welcome.
So everyone, we're going to go into breakout rooms. Yeah.
Darryl, real
Don't
fast.
leave, everyone. I'm gonna tell you, don't leave because,
everyone. Don't leave. Breaking news.
I'm gonna tell you something. If you're trying to connect with investors, and no, they're not gonna be telling you what their net worth is, but I'm telling you right now, you need to go into the breakout rooms and at least communicate with them. Communicate with these people. You don't know who they are. Okay. And if you're on camera, now if you're driving, keep that camera off. If you're at work, keep the camera off. You're not moving in with me. If you get fired, you can hang that up. All right. So keep the camera off. However, if you're at home chilling, go put a shirt on, you know, if you walk around in your pajamas. But I'm gonna tell you, if you're looking for money to build a relationship, you may want to cut that camera on. That's just a little tidbit. Go ahead, Alicia.
I was just gonna say, and I think he hopped off. Brian Geiger and it's an in-person meeting here in Phoenix. So it's our in-person mastermind, GOB Network Arizona that we're having. So we're getting everything together via in-person, but we will also be on Zoom so that everybody can participate, because we know that everybody on this line is interested in Arizona, right?
Yeah.
So we don't want to leave out anybody. So that's, mark your calendar, save the date for September 22nd. That's Tuesday at 6 p.m. Mountain Standard Time.
Fantastic. So we got the GOB in Arizona. Oh yeah. Hey,
Yes.
Reggie, what about that GOB in Atlanta for all those that's in the Georgia
Oh,
market?
I'm having at 12:30. I'm having a meeting about that right now with the group. We now that she's doing it in September, we might push ours out a little later. But we had ours coming in October. But we finna right now I'm starting the clubhouse. Y'all see that in the room. So I got the clubhouse going every week leading up to the meeting. I had it tentative for October 15th, but talking to a lot of the people that's having me, helping me with the organization of it, they want to push it out a little further. They got good venues that they're dealing with and good people that they're dealing with. So I'm going to be coming out. We are talking today about it. So I'll probably have something next week for you guys on a real tentative date, because we want to make sure, first of all, do we want to have it on a weekday or the weekend? So we're discussing that right now to figure out, do we want to have it on a weekday, the weekend? And the first meetup, we're trying to see if we're just going to have it at this one venue, which is a beautiful, beautiful venue. It has the water, everything out there. It's beautiful. So we're trying to see if we're going to have the first meetup there, and then we hooking up for the rest of the meetups during the week or the month. So that's all being worked out. At 12:30, I got to jump on a call about that right now with the team. So yeah, definitely working on it.
So we got the,
so definitely, but follow me on Clubhouse and you know, follow my follow Atlanta. You know, I'm on Facebook too. ATL GOB Atlanta on Facebook too. So follow me on there and follow me in the Clubhouse, and y'all know what dates and everything. I'll keep y'all on track. And the Clubhouse is every Fridays at 6.
Fantastic. All right. And last, I've been talking to the South Jersey REIA Association, which I am a member of. And I'm looking at starting a commercial multifamily subgroup with the South Jersey REIA here in Jersey, New Jersey. So, but I got to talk to, they got to bring it to the board and everything. So I'll keep you informed. For those who live in the state of New Jersey, it'll be a subgroup. I'm just trying to figure out how I'm gonna get this into my calendar. But we don't, our South Jersey REIA doesn't have a multifamily, commercial multifamily group. It's a lot of fix, flip, stuff like that. I'm not into fix and flip and stuff like that, right? So just want to put that out there. But let's go ahead and break out. We got a few minutes. Let's just go ahead and introduce ourselves in the breakout room. And then, boom, we're going to come back. Now, I always stick around an additional 30 minutes. Always. I always stick around for an additional 30 minutes so that you could get to know me better. And you can ask me questions. I don't care what it is. You can ask me questions. So, you know, because we work together here and you need to know me. I need to know you, right? 30 minutes, you can ask me anything you want. Or we can even talk amongst ourselves and have a very good topic. So we're going to go into breakout rooms, come back, and then we're going to take it from there. If you're in a room by yourself, just hang on. I will put you into another room. Believe me, I will.
We'll be able to come next July for the GOB.
All right, everyone should be coming back here pretty soon. Here they are. They're coming back. They're coming back. All right. So how many people we have left? All right, we got a few. So for those, again, if you're ready to make the ultimate leap, right? Oh, let me make sure everybody come back. Okay. So if you're ready to make that ultimate leap, to jump into the commercial realm, to get started and to acquire your first asset, I have put my email in the chat. And if you don't know how to save the chat, just open your chat and look at them 3 little dots on the far right side and say save chat. Right? And put save chat. Okay, Mr. Jarman, stay cool. All right, because I'm going to put together the next team. All right, I'm putting together the next team. Now I'm going to tell you, you're going to be working. You're going to be working. You're going to be meeting. You're going to be doing things. But don't be afraid, because you have the support of the GOB network. So don't be afraid. I just need you to step out on faith. Trust the process and trust the hard work I'm going to put you through. I'm having you in the backyard digging shovel holes. No, I'm not. But it's going to be some work. All right. So listen, thank you all for coming. And listen, I really appreciate the support from each and every one of you. If you're in the state of New Jersey, I was telling Al, let's try to connect, right? Let's try to connect in Jersey. If you're between that southern part and the northern part of Princeton and the southern part of Princeton, then we can meet right there in the Princeton area. All right. So, but I want to thank you all for coming out today. I hope that you learned something that was of value, and we're going to continue to deliver and bring great value to each and every one of you. So I look forward to seeing you back here next week, next Tuesday, at the Commercial Multifamily Masterminds, and we are an affiliate of the GOB Network of Apartment Investors. So thank you all for coming. Stick around if you can, and let's just socialize for the next 30 minutes to get to know each other a little better, okay? Thank you, and let's drop the mics.